Hey guys, it's Carter. Now in today's video, we are looking at Rumble stock. Right now today, it's been absolutely getting obliterated. It's down about 10%. So we're gonna be looking at what's going on with the company and answering that main question: is now a good time to buy this stock? So that's all the intro. I hope you guys all enjoyed the video. If you guys do, hit the like button, subscribe. So let's jump into it. Come on. Bam. So before we jump into it, what is Rumble? Well, Rumble is a social media site that is very similar to YouTube. It has a video forum platform, and the overall idea of Rumble is it believes in more of a free speech. And this has caused a lot of influencers and creators to gear their heads towards Rumble because they don't have the fear of cancellation or getting demonetized. Not to mention, Rumble historically has paid their creators more than YouTube. So this has caused a lot of people like Steve Will Do It, Andrew Tate, Alex Jones to post on Rumble instead of YouTube. And not to mention, over the past year or so, we've seen a huge increase in companies wanting to be more decentralized, having more freedom on what you can post on their platform. What we've seen is companies like DWAC, also known as Truth Media. We've seen companies like Twitter get bought out by Elon Musk, who believes in more of a free speech. And we also have Rumble, which is more of the video platform. So I definitely believe that there is a huge market for this because there's a lot of people that believe in more of a free speech platform. So we're gonna be breaking down kind of the revenue and then looking at the chart, looking at all the technical analysis. So the company brought in about $10.9 million, which is a ton of money because this is a huge increase year over year for Rumble. But you also have to realize Rumble right now is valued at $3 billion. For a company that only brought in about $10 million in revenue, this is a super overvalued point for the stock and the company because the market cap is way too high given the revenue and all the fundamentals. And not to mention, the company is not profitable. They have a negative 16% profit margin. What that means is for every $100 Rumble brings in, they lose $16. Now, I definitely think that starting out, companies go through, ups and downs all the time. Companies aren't profitable for years, if not decades, but you have to see an increase in this, right? You have to see them working towards being profitable or they'll eventually go under, right? And they are, right? We've seen a huge increase actually year over year for them becoming profitable, which is always a good sign. So a lot of people want to compare Rumble to YouTube. I kind of just want to break it down and give you guys my thought process, right? So Rumble, for me, it's awesome to post on it because you can make some money off it, but you have to understand that a company like Rumble could easily go under in the next 2 years. A company like YouTube that has been around for decades, and the company is backed by Google and Alphabet, which has $100 billion in cash. So if they ever go through a hard time or a struggle, or on top of that, if they feel some sort of competition, they can easily make another platform and have more of a free speech platform. I think that it could be a huge option for YouTube or Google. Not to mention, the average analyst price target for Rumble is $15 a share, which gives an ROI or return on investment of about 70% or so if you buy it right under the price that it's at about $8 a share, which is a great return. So now let's break down the technical analysis. All right, so looking at Rumble stock, you'll notice a couple of things right off the get-go. The first thing you'll notice is volatility. This stock likes to go up and down at pretty rapid rates. So looking at it, you'll notice it's gone from lows here at about $9 all the way up to $18 before selling off back down to $10, back up to almost $18, and then back down to $6.35, back up to $13, back down to $7. So high volatility. Overall, when you look at a stock like this, the first thing you always have to understand is volatility equals risk. There's no in between. All this up and down, you can make some good trades off of, but as far as a long-term investment, it's very hard to judge just because it has virtually no trend, right? It doesn't have an upward trend or downward trend. It just has a lot of consolidation, which is good because you can make some swing trades off this, but for a long-term investment, it's very hard to judge. So looking at it here, let's break down some support and resistance for this stock. So support is pretty much just when we get some sort of buying pressure entering this stock, right? And we see a tendency to get some decent support here at about $10. You'll notice it hits it a couple of times, once, twice, 3 times, 4 times, 5 times, 6 times, establishing some pretty hard support for this stock. Resistance, on the other hand, I think resistance, anytime the stock pops up above $13, this is when we have a tendency to get some sort of sell-off or more volatility, right? You'll notice it squeezes up and we just pop back down to that $13 mark. And then it's back over 13, pop back down. This one squeezes past 13, back down. And I overall think that you can make some decent swing trades just by looking at it. But one thing you have to understand recently is we've seen sell-off just due to the general market conditions we're in right now. I think that looking at something like the S&P 500 SPX here, which is just the overall top 500 companies in the United States, you'll notice that over the past year, we've seen a lot of volatility from this, and this is overall going to carry over into other growth stocks like Rumble, Tesla, Apple, Google, companies like that are heavy growth rather than more value companies, right? A company like Coca-Cola does well in bull and bear markets. A company like Waste Management does well in bull and bear markets because people always got to get rid of their waste. So you have to understand right now in the economy we're in, we're going to see a lot more volatility with companies like Rumble, DWAC, Tesla, Google, even Apple, which is a powerhouse as itself. But I always think it's smart to kind of make some trades, set some alerts so you can buy in, at some more affordable pricing here. So the best time to buy in, obviously, is trying to get it near and around this $7 and $7 to about $6.35. This is going to be the absolute best time to buy on the stock right here, right? We have that tendency to get buying pressure there. So if we can buy it near and around this price right here, I always think that this is going to be a great opportunity to buy this stock at a more affordable price. Okay. I also think it's smart to keep this stock under like 1 to 2% of your portfolio size, meaning for every $100 you have invested into other stocks, assets, bonds, ETFs, whatever your investment may be, keep this under 1 to 2%. Okay, so if this thing pops down and goes to $5, $4, $3, $2, $1, you're only out 1% of your portfolio. But if this thing starts squeezing up, you can always buy more shares, and you have shares. Right now, you have 1%, so you can still make some money off it. I think that's the best approach, at least for me, and dollar cost averaging so you can buy in on these dips is always a smart thing to do, guys. So that's kind of my mindset with this. Right now, we do have that price target right here at about $15 a share. So obviously, this is going to give us a great return. I think that we could easily see that happening probably in the next 2 to 3 years, being very, very, realistic for this stock here. So guys, that is it. I hope you guys all enjoyed the video. If you guys did, hit the like button, subscribe. Remember to stay happy, guys, stay positive, and I hope you guys have a great rest of your day. Take care.